Mehdi, let's talk about something that a lot of folks might not be familiar with, the term trust deed. What is a trust deed?
It's essentially a mortgage. And, what we do at United Legacy is we're giving an opportunity to investors to invest into a trust deed, get onto the first lien position, make anywhere from 9 to 12% returns, secured with the home.
Wow. So that's important to be in the first in line, the first lien, right?
Absolutely.
You don't want to be the fifth lien.
No, first lien. And we're underwriting at our bank, at La Jolla Capital Bank and American Mortgage Bank, properties that have plenty of equity, preferably 50% equity into the property. We're giving short-term loans at 12 or 24 months,
Okay.
With double-digit returns. A lot of retirees across the country are looking for fixed income.
Right.
With inflation, gas prices. In San Diego, we got gas prices hit $7.
Wow.
It went back down, but $7 is a lot.
Yes, that's a lot.
So, you got to have income. And so double-digit returns, short-term, in a climate where inflation is hurting the American people in the retirement years,
Right.
We're able to, take a $200,000 investment and get them that fixed income and sometimes pay up the interest up front.
So here's a question I know anyone would ask is how safe is it? Like it sounds too good to be true to me. That's a pretty good interest rate, and it's only you're looking at a 1 to 2 year kind of investment time frame, and the money's pretty liquid then, isn't it?
It is. It's the climate of the market today. Interest rates are higher,
Right.
So we're able to give higher yields. There's a lot of the consumers are real estate investors, fix and flippers, people that are still doing transactions. And we have a fund right now, and the fund is more for accredited investors. It's a 3-year hold. But as far as the security, it's very protected because of the equity into the property.
Right.
And now we have some partnerships that we're going to release and go live on where we almost guarantee the principal coming back to the consumer because of the equity position. You asked about the risk, and, what we look at is geographic areas where, I ask all the listeners, do you believe if a property is worth $1 million that the real estate market in your particular area is going to lose 50% value?
Right.
Well, if it does, then your $500,000 investment is pretty secure. But we back that at United Legacy, and we have partnerships where they back your principal. So if a client is in default, your $500,000, we're going to write you a check for that.
Yeah, so if you're talking about $1 million property and it has to fall to $500,000 for you to even worry about anything, then that's pretty good. That's a pretty good investment in my book there, because that'd have to fall 50%, and the property would. What I've seen with properties, it goes up and down, right? It'd come back eventually.
The key thing is 12 months is the term of the loan. So we got to also ask ourselves, do we think that the property values in North Carolina are going to drop by 50% in the next 12 months?
I hope not. A lot of people would be very mad at a lot of different things if that happened.
And where can you get a secure investment, secure being an alternative investment,
right,
not a regular investment, and get double-digit returns plus your principal back in a 12-month period?
It's secure because it's backed by the mortgage or by the property the mortgage has. A lot of people, when they invest in like a stock, there's no security there at all. There's no backing to it. If the stock goes down, you don't have anything to fall back on. But with a mortgage-backed place like this, alternative investment here, you got the mortgage, the property that the mortgage is securing to secure your investment.
Absolutely. But there's a lot of examples of alternative investments, and investments in real estate are alternative investments.
Right.
I believe right now the climate in America, it's the best time for us to invest into debt funds,
right, and
secured debt, not highly leveraged. So we can say a trust deed, but if you're lending 100% of something, whatever it's worth, that's not so secure.
No.
So again, having leverage, 50% or more equity, 12-month period of time, your name being on the title of the property, and giving you double-digit returns up front.